All right, everyone, welcome back for another episode of This Week in Charts via Carnivore Trades and Wall Street from Main Street. If you've not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon, or come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, doing this video obviously a day late here. Finally, pretty much got mostly settled in after the move here across country, now in the St. Pete area. Much nicer climate, so no complaints from me. Still a little bit of a hectic kind of situation right now for the first week or so, so just bear with me with that. But for right now, we're going to get you the charts here. I'm doing this video obviously on Monday, so we have last week kind of to recap, as well as Monday. So one of the things that jumps off, well, to start off first, we do have the FOMC coming up Wednesday, and the Fed is expected to do 25 basis points. So that is already essentially baked into the cake. I would be very shocked if they did 50. Generally, the Fed is not in the market, or not in the business of surprising the market. But right now we have, and this is kind of the thing that I've been talking about here, is we've rallied, even with today's little downdraft here. It was on pretty light volume, so more just a kind of a pullback there. But we've essentially rallied ahead of the FOMC, and pretty uncontestedly at that, with the exception of today. And whenever you rally up ahead of a volatility event, a big news event, or if you sell off sharply, usually you're going to get kind of an inverse reaction, because the more you rally into that specific news or whatever it is the market's anticipating. By the way, we also have Apple, Amazon, Meta, and Google reporting this week. But the more you rally up into those events, the harder it is to hold those gains. Again, the old adage, buy the rumor, sell the news. So essentially, this market is getting a little lofty here. It's almost as if the market is trying to price in like a full Fed pivot here. And I don't think that's what the Fed is going to do or say on Wednesday. Right now, I am watching this kind of little channel here, kind of a rising wedge pattern, which is a bearish reversal pattern. But for right now, it's holding up. I wouldn't rule out another kind of bounce into Wednesday here. It'd be a little surprising to me if the market kind of broke down before that. But it certainly could happen. If that is the case, you'll have some support at this 200 moving average. Again, 50 and 20 moving average, all kind of in this same zone. And it is, essentially that would just be a back check to this previous all-time high trend line. So that would be kind of your first level of support there if that were to break. If not, I do think we could get some type of a bullish reaction to the FOMC. But I think once Powell starts talking, I think that's when the market will really start to roll over here. So markets, again, they're holding up right now. There's no real technical damage at the moment, but they've had such a tremendous move off the lows here. And again, we talked about this. We said there's going to be a rally in January. We said that in December when really everybody was bearish. And now it's kind of the opposite. It's like everybody's new bull market, back to all-time highs. The lows are in. The Fed's going to pivot, and I'm not sure where they're really getting this from, other than the fact that we've had a nice move up, and they're just, you weren't bullish back here, but now you're bullish up here. So that doesn't really make sense to me. In addition, if you look at certain things like, I was just talking about Carvana, up 100% year to date. That's not the type of thing you see at the beginning of a bull market. How about Bitcoin? It's from 16,000 to 24,000 in a couple of weeks here. This is not the type of stuff you see in the beginning of a bull market. How about Tesla, up 80% here since January 6th? So this is one that I got my head bitten off for telling people to buy in late December. And we just had an 80% rally here. But again, this is not stuff you see at the beginning of a bull market. It's very typical. In fact, it's completely characteristic of a bear market rally. So this is the type of move we're seeing. You get these short squeezes, and they're fierce and they're impressive. But now we're getting kind of close to the end of the line, if you ask me. And it does seem to me like the FOMC probably will be the catalyst for it. If not that, then possibly Apple, Google, and Amazon earnings, which will be after the bell on Thursday, a day after the FOMC meeting. But in any case, if the markets do push up, there is a chance we could pierce this double top area on the spiders. For those of you who follow the ES, That's all the way. I don't think we'll get all the way up to that 4180 level, but I could see, maybe a little bit above 4100, maybe 4120, 4125, somewhere in that area. But you can also see you have that rising wedge there on the futures as well. So just be aware of that. For the triple Qs, this might have already topped here. We had a really nice outside candle on Friday. We confirmed above the 200 moving average, and then we closed back below it today. So this is a red flag here. So if we're in a new bull market, the Qs should be able to hold this 200 moving average on a back check. That could be considered a failed breakout there. So just be careful with the Qs here, and you want the NASDAQ to be leading to the upside. The NASDAQ, represents risk much more so than the Dow or the S&P. So to see that is definitely a sign of weakness, and it is something to be concerned about moving forward. Another few things that we'll talk about, and something I've mentioned a lot on my channel recently, is the Dow transports. Again, we know the transports are a leading indicator. At face value, this pattern's not terrible. Up move and you're just chopping sideways. That's not bearish. It's actually, I would say, bullish more than anything, despite the pretty good outside reversal today, Monday. Two things, though. One is that we closed below this green bar low here a few weeks ago. So that was a failed inside bar pattern. That tells us that the next rally is likely to be faded, which we've talked about already on this channel. However, beyond that, what do we have here? So just January 18th, high, lower high, lower high. And on the S&P, we have a high, a higher high, and a higher high. So the transports are starting to show leadership, or should say laggardship, to the downside. And we know the transports lead the market generally by, a week or so, maybe 1 to 3 weeks. So the transports are, essentially waving a warning flag here. So we have to be careful here with this market. Do not ignore the transports. They will tell you a lot about where the market wants to go. Also, the semiconductors, definitely do not ignore these either. Down 2.39% today. Nothing terrible. It's not broken. You still have a nice power bar here. You're still well inside of that. It's still holding up okay. But if the semis start to go, that's going to be another big red flag. They're holding up for now here. We got up to that 240 level. If we do pump up a little bit further, they could get up to 245. Again, I've been telling you guys that's kind of where I expect it to go. If we, that would be kind of your max move, maybe up into the upper 240s, maybe 248 for kind of a double top. I definitely can't rule that out, especially if we get kind of a knee-jerk reaction to the upside on the FOMC. But again, watch those semis. They will tell you a lot about the market here. IGV, so it's still holding up. So unlike the Qs, this actually has, it has retraced today. But so far, it isn't even really tested its 200 moving average. Today it was more of a big tech story. Tesla was down quite a bit here, over 6% on the day. Microsoft was down over 2%. Apple is down 2%. I believe Google was down 2.5% here. So big tech, a little bit kind of showing more leadership to the downside. But either way, IGV hanging in there okay. Again, ultimately this will go lower with everything else, but for right now it's hanging in there just fine. We already mentioned the transports. Let's talk about rates here for a minute. I do have, this is a pretty decent pattern here on ZBs, the 30-year. So the long bond actually have a little bit of a buy signal on this still, as long as it can hold above this daily green bar low here. And I think the long bond can get a bid. However, the 10-year, as you can see, is already below that green bar low, as is the 2-year. So you're seeing a little bit of a divergence here in yields. The long bond is getting more of a bid, and the short end of the curve is selling off here. So again, the 2-year here, this is going to be a huge problem if this starts to really roll over. If you break this trend line and head back towards the lows, it's going to be a massive problem for the market, because everybody right now. So let's look at the spiders again. The whole premise for this rally from 350 to 410 on the SPY is based off of the fact that everybody assumes that rates are done. Like, rates are done going up, and the Fed is going to, the market thinks the Fed's going to pivot, or at least some participants do. But if the 2-year starts to roll over, that completely is negated. That entire thesis is negated. So just be careful here with the 2-year. If this breaks, and it hasn't done any serious damage yet, but if this breaks, that is a huge problem. So the market wants to see this get a bid, not the other way around. So just be aware of that with the 2-year moving forward. Home builders here, they're still holding up okay. They are very top heavy though. There's the ITB as well. Got up to that 68 handle. I think the XHB could pierce 68, maybe double top. Again, like if we get a knee-jerk FOMC reaction, I definitely can't rule it out. But again, they are very top heavy, and I would not be long these right now. Same thing with VNQ. We tested the 200 moving average. Basically, the last 2 days, for all intents and purposes, didn't quite get to it to the penny, but close enough. And we did back off pretty nicely, especially today, but we held Friday's low. So again, they're holding up for now, but these are not things you want to be long going into 2023. XLF, again, starting to look more top heavy here as well. It is kind of coiling up here. You could almost make a case you have kind of a similar pattern as the spiders here. So kind of like a rising wedge type look here. So something to be aware of there on the XLF. Maybe it could get above double top. Again, I think 37 would be probably your max move. I don't even know if it gets up there. But again, financials, just like the home builders, are not something I want to be long in 2023. The market doesn't care about the inverted yield curve right now, but it will moving forward once that. You guys remember that the yield curve inversions can take 6 to 12 months to really start to play out. And the 2 and 10 has really only been inverted since really kind of June. And the 3-month 10-year has been inverted since, I want to say, October. So we're kind of coming into that window right now where we're going to start to see economic damage. And that will put a lot of pressure on these banks. Again, it's not really being priced in just yet, but it will be probably in the next quarter. So just be aware of that. Broker dealers also holding up. Again, I told you guys 490. It got there. Could it get up to 492, right into this area? Sure, it's possible. But again, very top heavy, just like a lot of things here moving forward. So keep that on your radar. For energy here, so crude, again, backing off a little bit. We've been talking about this. We still think crude is kind of in backing and filling mode right now. And had a nice sell today and really Friday. Not a crazy sell on Friday, but it did follow through to the downside today. And you can actually see here, if we look at a weekly, we took out not only last week's low today, but the previous week's low as well. So again, it's only Monday. Who's to say we don't rally back up and put in a higher low and then, push higher, but we still have that weekly inside red bar there. So big red bar, and you're inside of that. So that is still a bearish pattern here for the time being. I would love one more flush in crude, honestly. We'll get, I think, a really good buying opportunity if we can get that to happen. And I think there's a good chance of that. So something we're going to keep on the radar here, but crude continuing to just be kind of in chop shop mode here. It's really been in a range since November for the most part. And you can even make a case since September. I mean, outside of these 2 little outlier kind of bids here, it's been really kind of sideways really for the last quarter plus. So anyway, so crude under a little bit of pressure here today. We'll see if it can put in a higher low moving forward. XLE still holding up really well, but nice sell-off today. Again, no terrible chart damage here. Still above all 4 major moving averages. I still can't go long these right here. They need to do more of a correction. And right now, a lot of funds are kind of piled into specifically like Exxon. They're like basically like hiding in Exxon. That's kind of what I call it because there's not a lot of other things that are working right now. And I do think once you get piled into something, you can also get piled out. So that's why I can't personally go along these up here. They're too lofty. They need to come in. But again, they're holding up really well. XOP, same thing here. It did fade pretty sharply on the last 2 sessions. And you're still inside of this red bar here. So we'll watch this one moving forward. OIH, again, still holding up really well. Had a nice sell-off again the last 2 days. Nothing crazy. You're still inside of this red bar. But again, on the weekly, you have a green bar that you're inside of. So the weekly is more dominant. If this consolidates more, this can go higher. I still think it's going to correct, but it's holding up for now, so I can't really say anything about it moving forward. Nat gas. This one is just probably one of the most ridiculous trades of the year. We're now at, so nat gas's 2023 cost of production is estimated to be about 490 BTU. So for the average, and in 2022 the average was 665, and we're at 267 right now. So, I mean, that just tells you right there that there is a massive discrepancy here. I think this is an absolute no-brainer at this level. You're into major support here, long-term support. You can see here, look how long it took you. So once we broke through this level here, look how long it took you to get back above that and sustain above that. It took literally over a year, almost 2 years to break that out. So that's where the money is sitting here. I don't know, maybe China pushed this down. I have my suspicions here. I think somebody wanted to push it down to take delivery during the contract rollover below $3. We just had a contract rollover last week. So that is something that I'm kind of considering here. I have some kind of suspicions with it, but the fact remains the cost that this is now below the cost of production for some of the higher cost producers, and that is, in one word, unsustainable. So I think it's a no-brainer here. It's down from $7 to basically $2.50 in a month. So you can see it just from that alone, wickedly oversold into massive support, and the numbers simply don't add up. So I love the case for nat gas here. This is going to be a massive, I mean massive buying opportunity if you're willing to take it. But you got to buy into fear and you sell into euphoria. You know, everybody loved nat gas up here, but now everybody hates it. So again, like I was saying earlier, you know, with the spiders, you know, everybody was telling us, oh, we're going down. And, you know, we were saying, no, we're going to have a bear market rally. And now everybody loves the market. But, you know, why, if you don't love it here, then why do you love it here? So anyways, nat gas, I love it down here. And we'll just leave it at that for now. Dollar index DXY, again, still I think it's trying to carve out a bottom here. I am bullish the dollar right now going into the next couple of months. Also, another thing, too, that I haven't even mentioned, February and March are historically the worst months here, performance-wise for equity markets. And the more we trade up into February, the more likely it is we do see some sort of sell-off. So it's something to be aware of there. But dollar also has not made new lows here. So you put in a low on the 18th, and we haven't taken out that low since, but the spiders have. So again, a little bit of a divergence there with the DXY and the spiders. Just something to keep an eye on moving forward. Gold is holding up like a tank here. I can't really say anything bad about it other than the fact that you are into resistance and it is way overbought. So I cannot be a buyer of gold up here as a swing trade. It's got to pull back here probably at least to 1825, 1830. So there's your pivot high. This is your consolidation base. You know, if you wanted to long it there, I wouldn't have a problem with it. You know, you got the 200 moving average below that. But it's way too overbought and extended here for me to want to buy it as a swing trade. Same thing with silver here. I mean, it's not extended, but I don't like this kind of rolling top look. It is a nice consolidation here, but you can see on the weekly, there we go. You can see how you have higher highs and now you're starting to make lower highs. I don't like that look here. I do think silver wants to correct here. I think this consolidation is going to fail and we'll probably get a correction here, which will be a correction for buying. So I just want to be clear on that. I do like the metals. I do like silver a lot more, believe it or not, in 2023, but they've got to have a correction first. So that is my stance there. Platinum here. Same thing. This is starting to have a nice correction here. Had a nice move here off the lows, and we were all over this move here, this double bottom. And it's just been by the dip pretty much ever since. I do think this wants to go test 975, though. You did some technical damage. You finally got through this trend line, which is held since the lows. I mean, that was the low of the year. And that's been a good trend line that has broken now, and we're back below this trend line, so we'll probably go to the next level, which is 975. If you get through that, there'll be a really good level at 945, 950 on platinum futures. So we'll keep those on our radar moving forward, but platinum is in backing and filling mode now. Copper also, I think, is coming in off the highs as well. That is probably topped out for now. Again, $3.95 to $4 is what I'm looking for there. As far as some other equities here, let's look at CCJ. So CCJ is actually holding up really well, and we closed above that red bar high. So again, that was 2702. We closed above that. We've negated that. That gets me very bullish uranium right now. Basically, that doesn't mean just buy it here, but if we get a pullback, a bull pattern, bull flag, you can buy this, and this should have a lot of upside. So essentially the thought process here is big red bar, massive distribution volume, right? Bear flag, Now that bear flag has failed. We should have gone lower and we're going higher. See the volume there? That's historically high, right, for the weekly volume on CCJ. It takes a lot of institutional energy to get it through that. So uranium looks very good to me right here. URNM, same thing, just closed above that red bar high there last week and above this trend line. So this can be bought on dips as well. I like the URNM here. You can see URA as well, same thing. Sprott here, UUF didn't quite do it there. This is a newer equity, so I kind of give that one a little bit more leeway. It's also a lot less liquid than CCJ, for instance. So there is a little bit of margin of error in regards to that. But bottom line, I like uranium here, and you get a bull pattern on it, you can long it. So I like uranium moving forward. MOS, so all over the map last week, but that was really that kind of they call it a technical error that happened last week, where we had that gap down. They never really fixed it. There's a lot of charts like that, Wells Fargo, Exxon, AT&T. Look at that move there on AT&T there. But so that is kind of a technical error, but it's holding. We talked about that 100-week moving average. It's holding that level here, and we'll see if it can make a lower high. If you can get above 50, 53 on a weekly close, this should go up and test that 50-week moving average. It's hanging in there okay. NTR, same thing. That's actually in a little bit better technical shape here than MOS. And then DBC, again, same kind of thing here. Got above that 20-week moving average, had a reversal last week. Now under a little bit of pressure here, but this is still holding up okay. Again, big picture, it's really just doing kind of backing and filling here on the monthly time frame, and it's holding that 20-month moving average. I do like this to get a bid here. Anyways, lastly, let's just get Bitcoin really quick. So Bitcoin continuing to hold up. Let's actually go over to Trading View here. Bear with me 1 second. All right, so Bitcoin had a nice rally here, and we've had a nice consolidation as well. And then we got a pop on Sunday, and I never like it when Bitcoin rallies like that over the weekend, because generally the exchanges are closed. It takes very low. One institution can bid this up with very little capital, and then you get a lot of retail to chase. And you can see what happened here. Monday, we came right back down, engulfing reversal there on Bitcoin. This could still get to 25,000. This isn't major technical damage just yet. But we'll see what we do. Again, obviously the FOMC is going to move markets here. So again, this is still can get up to 25,000, but a nice reversal there on Bitcoin on Monday. Anyways, back over to the spiders here really quick. Again, we'll keep an eye on this rising wedge pattern. If we have a bullish move the next 2 days into the FOMC, this would probably be your max upside. So basically your double kind of triple top. If you break this lower trend line, I think the market is cooked though. So let's be on guard for that. Again, do not ignore the transports. They're definitely talking to us here moving forward, and do not ignore that weakness. So anyways, guys, gonna wrap it up here. You guys take care. Come find Jason on Patreon. Come find me on carnivoretrades.com. Talk to you guys all next week.